Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 14th of November 2025. The first chart is the S&P ASX 200 index, the XJO. This is the parent index, and it closed lower this week. It did attempt to move higher initially, but some economic news was released during the week, which the market wasn't very pleased about and reacted pretty poorly. And then on Friday, the market had to adjust to some pretty serious weakness emerging on overseas markets. And that saw the market thrust lower on Friday and close near its lows. The important level we were watching above was up here. And this was the lows of the range through here. You can see the markets closed clearly below that level this week. Volume was increased, but it remained a little below the average overall. So it was only modest. And after looking through all the weekly charts just prior to this video, it does appear that it really was a mixed bag across the ASX this week. Financials dragged this particular market down quite some way. As you'll see, the mid-caps were nowhere near as weak. That being said, for this market to recover, it's going to have to get back above this 8750 level, which are the lows of the range in here, and it's likely there'll be increased resistance or selling pressure drawn out when it attempts to do so, or if it attempts to do so. A recovery back above that level would actually be fairly strong because it's unlikely to happen in the near term. It can always happen. It's just less likely when the market breaks down like that it's strong enough to immediately recover. If it did, it would prove to be a sign of strength for the market. Let's look through the other charts first. We'll come back to this one after. This is the mid-cap sector. It actually closed slightly higher for the week, but only fractionally. Price traded inside the range of the previous bar for the week. Volume increased to average. The fact that the market remained as an up bar and didn't even close as a down bar, here's the lows of the range through here, so it's not even threatening the lows at this point in time, suggests there is some buying in this market, more than the XJO, the parent index, would have you believe. That market looks as though it's going to break down. This market suggests it's trying to hold on. The market didn't threaten the lows of the range, and it remained as an up bar for the week on increased and about average volume, which was a pretty good effort, you have to say. I would expect this market will probably test for supply and response next week. It would be hard to see it do much else. That would look something like this. And perhaps test these lows, test the strength of the buying support at that level. But we'll see. Small ordinaries did a very similar thing. They had already begun to break down, and this up bar, using the low of that up bar as a measure of strength, the market pushed below it last week. But this week, prices traded inside the range of the previous bar for pretty much all of the week. There's a tiny little dip below at one stage, but it's recovered. Volume increased but remained below the average, so selling pressure wasn't overwhelming, and that's probably why this market was able to remain as a slight up bar for the week. This was also a pretty good effort in what appeared to be a very weak market. This market showing a reluctance to break down, as is the mid-caps. Next chart is the financial sector. This is where a lot of the weakness was drawn out. This is by far the largest sector in the Australian Stock Exchange by a long, long way. So what goes on in this market in particular reflects on the parent index, the XJO, very strongly. This level up here is where the market was having trouble to break out. It attempted to several times, but just didn't have the necessary strength to do so. And this week, price has effectively broken below the lows of the range through here. Not substantially, but it has pushed low with a very wide spread and about average volume. There is this level here below where you would expect last gasp support to remain. So you might see testing for supply sort of around that level next week. Below that, you've got levels down here. Where you'll see the market attempt to support if it continues to break down. It may also be this market overshot the lows this week and it really intended on closing around the 1050, the lows of this bar. And you'll see the market recover just slightly next week. So we'll see how this market plays out. This is the market which has caused the weakness in the parent index, the XJO. And the big four banks and some of the other very large stocks aren't reflected in the mid-cap sector, and that's why it was able to hold on. And they're obviously not in the small ordinaries either. So it was the weakness in this sector predominantly which caused the weakness in the parent index and not some of the other sectors, as you'll see as we move along. This is the metals and mining subsector. This is effectively the miners. And here, down here was the level we were initially watching where the market couldn't break out initially. It did push out. There was some other resistance lines above which this market had to negotiate, which it did over a few weeks. It eventually broke out, pushed up to the highs of the range. It pulled back along with commodities generally. Then there was a test for supply, a shakeout. And we know in futures markets in particular, a test and a shakeout often equals a breakout. And while we haven't got a breakout yet, we did get an up bar in response. Volume increased, but it remained below the average. So selling pressure wasn't an issue. This market was able to float higher on a lack of selling pressure to a large degree. A push above this line, like this, would effectively see this market break out. You may see some testing for supply first, something like this. Some absorption. This is daily bars on a weekly chart before there's a proper attempt to break out. But at this point, there has been a test for supply, a shakeout, and a positive response, and that's usually a good sign. Next chart is the gold sector, and you've had something similar in this market as well. You can see how the market was moving higher, would push higher, test for supply, push higher again. This is where the weakness in gold price emerged. You've actually had two tests for supplies or two little mini shakeouts. And if you note, the first one did draw out some supply. Second one saw selling pressure really low. That said that the sellers were pretty much done here. And so long as the price of gold didn't break down, this market was primed to make an attempt to move higher. And it did so this week in response on slightly increased but remained below average volume. So selling pressure wasn't an issue. This is the important level here that we want to watch. This is where you'll see a breakout occur. There may be some absorption required right up at the highs of the range through here. And then if that's successful and the price of gold continues to gain, you'll see an attempt to break out in response. This is the energy sector. It also closed higher this week. You'll note the last three charts have all closed higher, despite the strong weakness inferred on the XJO, the parent index. We noted at the time the strength coming in down here. Price moved up nicely. Here was the highs of the range where the market did stall out. Price broke down here, pushed lower. There was a clear reluctance to move lower through this period. over 4 weeks, and then in 1 week the market recovered all of those losses. Prices since moved higher in response, and you'll see that this week the market did push up. If I bring that line across, there was a little bit of resistance found from supply drawn out to the left here. That's probably what's caused the mid-bar close. In response, I would expect a test for supply and perhaps some absorption prior to any attempt to challenge that level and move higher. But since the market's recovered on this bar, we've seen relative strength in this market. This is the healthcare sector, which had a severe shock here. We've seen some buying support emerge back here. We've seen price push up in response. A period of accumulation through here. It was all looking good. And then we had the market stall to some degree through here. And then when one of the stocks in this sector announced poor results, all bets were off, and you've had the market sell down strongly. It was an attempt to stabilise the market through here. But that's also failed at this point. Price has broken down a second time, albeit with a narrower spread and reduced volume. So this may be an attempt to stabilise the market. And you may see further sideways trading here. Just see how this plays out. At this point, volume increased considerably this week, right up to the average level. I know it looks low. That's because it's being dwarfed by some of these other volumes back in the past. But this was the strongest volume for at least 7 weeks. And on that, price had a very narrow spread and it closed at a very slight down bar. It didn't threaten this bar's low, which is the important level in the near term. This was absorption, possible accumulation down here. There's a fair bit of volume go through and price hardly moved. Someone was just allowing that volume to come to them and they absorbed that volume. They bought that volume as it came through. See how it plays out? But at this point, that looks suspiciously like accumulation. This is the ASX industrial sector. It was having such a good run, we followed it for ages until this bar arrived on quite an increase in volume. Doesn't look like much, but the narrow spread, above average volume, down bar in response, there's no doubt this market was sold down after a big run which we'd followed for months and months. It was an attempt to stabilise and recover through here. Price pushed up as the overall market saw some strength, but weakness emerged again, although the lows of the range were respected here. Price attempted to recover again. Further supply was drawn out up here. That's this volume here. Price pulled back again in response. So you've had supply drawn out a number of times through here. Here's the last gasp lows. So you've got a little bit of room. This is the lows of this up bar, which you would use as a measure of strength in the market. The price is right back to that level again for a second time. It's knocking as though it's going to push through at some point. You've got a little bit of support in this zone through here and a breakdown below that level, below this bar's low, would probably see this market break down and be unable to recover. So watch this market carefully. I will note, though, that volume was quite high this week, and on that volume, the market did not push very much lower. So there may be an attempt to support this market here. It is at a very important level, but it will need some real buying support to come in, and that demand to continue to support the market if it's going to stabilise at this level. This is the consumer staples sector. And despite the weakness in the broader market this week, this market hardly closed lower at all. You can see this market is closing through here with supportive bars all the way through. You put the highs of the range there, lows of the range here. This is a couple of tests of the lows. You'll have resistance at this level. At this point, the market is trading sideways in consolidation mode, possible accumulation mode. There was an attempt to push higher this week, but the weakness in the broader market saw price close back just below mid-bar on an increase in volume, but slightly below average volume. So it wasn't overwhelming supply drawn out. This market just saw the fact that it was going to be difficult to push higher and break out when the broader market was weak, and it floated back to close just a little bit below mid-bar and adjacent to the two previous closes. Next chart is the consumer discretionary. We've been watching this market push higher with some intent more recently. It was a little bit troubling when price wasn't able to reach the highs of the range through this zone here, and eventually price did break down. There was an attempt to recover before price really thrust lower on this bar. The last 2 weeks have seen the thrust lower shorten. You can see the spreads narrowed here on an increase in volume. And this week, the thrust has shortened even further on a further increase in volume. There is an attempt to support this market, but supply continues to be drawn out, and the market won't reverse and go higher until the supply eases considerably, generally. So this market's probably going to just show this reluctance to move lower through here while the supply continues to be drawn out before there's an attempt to move higher. This is the ASX property sector. Highs of the range come through here. We saw the weakness emerge here. The market attempted to neutralise that weakness through here. We saw the price break down here and it continued lower this week, albeit on slightly reduced and slightly below average volume. You've got last gasp support coming through here, and that's where the market's attempted to cling on to this week. We'll have to watch that to see whether that's going to be successful or not. And it will depend to some degree on the strength of the broader market. We'll just go back and check the parent index after seeing all those sectors. I was quite pessimistic initially with this break below the important level, the lows of the range initially, but after seeing the mid-caps didn't break down, they held on and showed some intent. The small ordinaries didn't break down. All the weakness came from the financial sector for the most part. The metals market was higher, gold was higher, energy was higher. Healthcare is holding on, attempting to consolidate. These aren't signs of broad weakness across the market. It was really only one sector, albeit the largest sector on the stock market, and that's why the parent index was drawn down so low. The response is going to be important, no doubt, and it's going to be difficult for this market. It will encounter supply if it attempts to recover back above the lows of the range. So just how it negotiates a path through here, we'll have to wait and see. Obviously, a break below that bar's low would be really weak. But all doesn't appear lost, and things weren't quite as pessimistic as they appeared after looking at all the other sectors and putting them in context. with the parent index. I'm not saying the market's strong under any circumstances, but it's not as weak as it appears when you look at the parent index, the XJO. I think the broader market is a little stronger than the parent index at this point in time. Okay, thanks for your time. Back again for another look next week. See ya.